Hey guys, this is a quick video breaking down what all is actually involved in a mortgage payment. Now, production value is not super high here, I'll admit that, but the information is good and I really think it can help you. All right, I want to make a quick video talking about monthly payments. It's one of the most basic aspects of buying a home, and yet it can be the most misleading because there's so much bad information out there. So often we meet with clients who have been using some sort of online mortgage calculator, and that's great, except that they've been getting the wrong idea of what that payment may be. Now, there are 4 to 5 details typically that are going to all come together to add up a total monthly payment. And many of those online calculators do not include all of those. Therefore, they kind of set you up to think the payment's going to be less than it is. So let me give you the 5. Right off the bat, you're going to have your principal. Now, principal is the portion of that monthly payment that actually goes towards paying off the loan. Then you're going to have interest. Interest is the cost of your loan. So the bank is loaning you money, in most cases for a house, hundreds of thousands of dollars, and interest is how they make money for doing that. So that's your interest added to your principal. Then you're going to have your taxes. In most areas, you're going to have property taxes, and the bank wants to make sure that you don't fall behind making those tax payments that could put the property they loaned you money for in jeopardy. So what are they going to do? They're going to collect monthly from you a prorated amount of what those property taxes are, and then once or twice a year, depending on where you are, when those fees are due, when you get your tax bill, the mortgage company is actually going to pay that bill for you because they've already been collecting that money from you on a monthly basis. So they've got it sitting in what's called an impound account to pay that bill on your behalf to make sure it gets done. Then you're going to have your insurance. Insurance is the same kind of thing. So again, the bank is loaning you money against this property, so they need to make sure that property is protected. They don't want to risk you not paying your insurance payments and then say the home catches on fire or there's a flood or who knows what, but the home was not protected. Now you walk away and they're out all that money. So just like your taxes, in most cases, the bank is going to collect a prorated amount from you each month that equals up to your annual premium for your property taxes, for your insurance, and they're going to pay that insurance payment on your behalf when it comes due out of that impound account. So we have principal, interest, taxes, and insurance. The 5th one, in most cases, if you don't put at least 20% down as your down payment, there's going to be something called private mortgage insurance. What this is an additional protection for the bank. The bank's basically saying, look, you put a small down payment, so we're taking a lot of risk here. We're not really comfortable with that, but we know it's hard to save up that big of a down payment. So if you will purchase private mortgage insurance on our behalf to cover us in the event that you default, that you don't pay your mortgage, then we'll still do this loan. So we're going to get all that set up, and we're going to charge you a monthly amount for us to use to pay to get that insurance so that we're covered, right? Us as the bank. And so you end up with your principal, your interest, your taxes, your insurance, and in many cases, private mortgage insurance. Now, when you use your online mortgage calculators, many of them will only use principal and interest. So now you're leaving out, 3 of the 5 aspects. And so no wonder that payment ends up a lot lower. But the other issue is they may be using an inaccurate interest rate. And interest rate has a huge effect on what the monthly payment is. So you want to make sure if you're using an online calculator that it's incorporating all 4 or 5, depending on your down payment amount, aspects that should go into this payment, and that it's using an accurate rate for the interest rate. Now that last piece can be a little bit difficult. If you try Googling around to find current interest rates, it can be a little confusing. Many companies, especially your online mortgage banks, will advertise rates that are much lower than what you might get in reality, because they can technically give you that low rate, but there's a whole bunch of fees associated to that you may not be willing or able to pay to get that low rate. So at the end of the day, the rate you actually have is higher than what's being advertised. It's kind of a tricky bait and switch thing if you ask me, but it is all over the place if you start Googling interest rates. So the best thing you can do is reach out to a realtor or a mortgage advisor who you trust to get an accurate interest rate. And at that point, might as well go ahead and let them run some of these numbers for you just to give you an idea and say, hey, I'm looking online, homes that I like seem to sell for X amount. What would a payment look like on that? And just get the data so you can be informed. Best thing to do when you're considering buying a home is to be informed so you can make sure you make the best decision for you.